You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. Welcome to the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo, coming to you from the newly renovated, newly expanded, almost finished Options Insider Studios here. Should be just in time for next week, the big live shindig episode 500. Going to even try to live stream it here. Going to have a bunch of people live here in the studio. As I'm looking, there's still a few holes in the walls and a few wires hanging out, so hopefully we'll get all that sorted out by next week, and we'll be all set up and ready to dance. It should be nice. Won't be completely finished, but it'll be enough to get the job done. We're looking forward to it, so tune in next week, episode 500. That means, yes, we are off on Monday, listeners. The markets are closed for President's Day here in the States. Otherwise, big 500 would have been on Monday. But no, can't do it on the day when the markets are closed. So stay tuned next week, and look forward for us to even live stream that one out for you, which should be pretty fun. We're working on all those details behind the scenes for you. I know a lot of guys are always asking us, hey, how do we get in on listening to the show as it's going out? Well, we're going to try to set that up for you next week. So stay tuned for that. And of course, in the meantime, you can always find all of our episodes, all of our archives, pretty much in the mothership, the flagship, theoptionsinsider.com. Of course, while you're there, read those great breaking news from the options market, headlines, UA, all that good stuff. Some education thrown in there as well. Some analysis, even some futures and other products thrown in there as well. Nice smattering of product selection. Then, of course, click on the Insider Radio Network tab while you're there to enjoy the latest and greatest from this here network. And, of course, all the fine usual places, iTunes, TuneIn, Stitcher, soon to be Google Play. They're going to be adding in the Google Store podcast pretty soon. They're a little bit late to the podcast party, but we've already been submitted and approved there. We're just waiting for them to turn on the switch for their actual podcast store. So all you diehard Android users, who for maybe some reason you don't want to use our app, or maybe you have our app, you want to have a centralized place to get them in Google, you'll be able to get those soon as well. So no shortage of places for you guys to check out our content and listen to it and enjoy it. And of course, while you're listening, send us your questions, your comments. Got a lot of great ones today to get into in a little bit. Before we do that, let me turn my attention here to my cohorts, my partners in crime. Starting off, let's go in order of proximity this time. Starting off in that small, sleepy, provincial hamlet, that one-horse town, if you will, and that one horse is indeed Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir.
It's a golden horse today, though, baby.
That it is. Gold, feeling the love. We'll get to that in a bit, but before we get to that, someone who's not really feeling the love, but he still agreed to join us on the program today. He is the Rock Lobster himself, and of course, as befits his stature or status as the resident Mainer, New Englanders are a bit cynical, a bit grumpy sometimes. He's a bit upset about some fills, but he still agreed to join us nonetheless. Mr. Rock Lobster, welcome to the program, sir.
Yes, I am upset about a couple of fills, but that's the way it goes.
Them's the breaks when you're slinging, when you're playing with dragons. Sometimes you get burnt, sir. That analogy doesn't really apply, but I like it anyway, so we're going to stick with it as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the show we break down what was moving, what was shaking, and pretty much what wasn't moving and shaking today, listeners. Another crazy day. We were recording a show earlier in the day here, earlier in the session. It seemed like, once again, the world was coming to an end. Most of the major indices off about 2%, if not more in some cases. It seemed like this was just yet another one of those days of, oh no, here we go, the world is ending. And then you wait for maybe tomorrow or the next day for, oh, the world is all back to normal again, for that rally, the inevitable rally to the upside. This is one of those days, actually, where we got it later in that same session as we're recording this, as the sessions are winding to a close here. Most of the major indices, well, S&P off about nearly 1% or so after having been down substantially on the day. A 37 handle range out there in this boost today. Got to open up about 1847 and then immediately got down to about 1810 or so on the lows before finally bouncing, settling out towards the end of the day here right around the mid 1830 range, 1835 or so. So quite a range in ye old SPOOs. Of course, NASDAQ actually, after having taken just a terrible beating over the past few weeks or so, turning back to the green today, actually finishing up. The Q's up nearly half a percentage point on the day today. So interesting kind of bit of reversal of fortune there. Dow, the laggard to the downside, off about 1.3% or a little over 200 handles on the day. And of course, all this down and up and down and up, that translates to volatility, listeners, which means ye old VIX cash flirting up with the high 20 range. You know, I kind of poo-pooed it, the guesstimates of a crazy high 20 range on vol views last week, and it looks like we're coming into that range, hovering right around the 28 handle right now in the old VIX cash. So a lot of stuff popping off. But Uncle Mike, as you alluded to, one of those things being the shiny stuff, up about another 4% or so today out there in gold land. So let's start there. I'd imagine gold caught your eye, and then what else caught your eye out there in today's back and forth yin-yang activity?
I have to admit, gold blinded me so much it caught my eye. I didn't really see anything else. It was really amazing with that today. But
we need a rim shot for you there.
What's that?
So we need a little rim shot sound effect for you there.
There you go. No, I think that with gold doing what it did today, it's the rally's no longer quiet. I mean, this is one where when you see a 4% move in gold, I mean, this isn't some weird tech stock or this isn't anything like that. This is gold. This is something that does not move that much typically. And when we're up close to almost 20%. At one point today, I think we were up 20% from the lows in late December. When we get that kind of movement over a 2-month period, especially when you add it with a 4% gain in one day today, that's something that is turning a lot of heads, as well it should. The other thing with which I did notice today was just kind of like what you had talked about today, is this was a day trader's dream today, and that we were very low to start. We went higher. We finished kind of closer to the highs on the day, closer to the highs into the lows, but there was quite a peak to trough range on the day today. And so if you're a day trader in this market, it's a phenomenal time for you or a phenomenally awful time for you, one of the two. But there is a lot of volatility intraday at this point. In terms of some other things that were catching my eye would be the lack of movement in oil from start to finish. Now, looking at an intraday chart of oil, bring that up real quick. Looking at an intraday chart of oil today, didn't have quite the moves that we've had in the past, but from start to finish, looking at the open today of oil, we opened in we're probably about 20 cents away from where we opened. We had a few down drifts in oil today, but nothing too serious. So curious to see. I know I've been saying this for a while, but I think oil might be closer to the bottom than to the top. But you never know. I've been wrong before.
Does seem it's on a purely percentage basis. That kind of has to be right at some point, right? But we've been saying that for a while, and it continues to print new lows and surprise everyone to the downside. So we'll play wait and see on that one again for a little while longer. Let's turn our attention to the grumpy one over there. Mr. Rock Lobster, what caught your eye in today's activity, sir?
VIX hitting almost 30, actually, today. That kind of caught my eye. The Skew and Mr. Tussauds Gold on the upside is getting a little bit off the hook. Very expensive. And the Skew is now inverted again, where the put volatility is cheaper than the call vol. So if you want to get long gold, just buy lots of GLD and lots of puts, because they're the cheaper options right now. So quite And another thing was Yellen's testimony of, well, we're going to raise 4 times this year, but we've also thrown around the idea of negative interest rates. Like, what the hell is that? I think when that hit the tape, the SPX futures dropped like 10 handles, like right away, like boom. So I don't get what's going on there in the Fed. I think they should just not talk for a year.
I'm totally on board with that train. Just shut up until you have something to do.
This is our policy. Here are the rates. We're done for a year, and we're just gonna go back to our room and shut up. Because it's ridiculous.
At this point, could their silence possibly hurt anything? Leave the market to speculate as it's wont to do. It can't be worse, right?
I think so. Like what could make it worse?
Is the silence going to inject more vol? Are we going to hit a 40 vol because the Fed doesn't talk?
Yeah, I don't think so. I think, you know what? I think the vol goes down because, this is the policy. We're just going to stop trying to fix everything because it doesn't work. So anyway, I think VIX did have some weird spikes, but traded around 30, a little over 30. The market was down over 2%. It certainly looked ugly enough. And that's what we had. I think, and the reality is, tomorrow's another day and it's not going away. I don't know what's causing the vol. Everything that's causing the volatility is uncertainty about the ability of the central banks to really do anything at this point. And I don't know how long that stays with us. A couple of weeks ago, we joked, the reason for the volatility has not shown itself. Well, and this is, you could go back and I'll bet you Tucson, but my closet thought was when they announced the budget for the U.S., they had their great budget deal that basically, they blew all the spending caps off. And that was kind of the beginning between that and this kind of recent round of currency devaluations with Japan going to negative interest rates, with the Chinese just devaluing their currency. All those things just kind of add up. Like all of a sudden, nobody's the adult in the room anymore. Instead of kind of trying to maintain stable currency and stable budgets and not, embarking on a negative interest rate madness, we're getting the opposite. And I think that the equity markets, and let's see if Mike's agreed, the equity markets hate uncertainty more than anything. And especially when you throw oil in there and all the debt that's, and it was good debt at the time trying to develop oil. And that's what we have. And I just don't think, I think the volatility is going to range in the 20s, could see the 30s again. And it's going to stay that way for a while. The market is going to be a day trader's paradise. And I guess gold keeps getting a bid as long as everybody thinks that the central bankers are going to lose their mind and go to negative interest rates all over the place. And the world still has positive economic growth the last time I checked. So I don't know what the heck they're looking at. I mean, I could see if it was negative growth but it's not. So sorry. No more central bank talk. They just got to be quiet. We should ban them from the show.
The central bank cast. That would be hugely popular. Audience of one.
I say we ban them from the show.
Well, it's interesting that we're talking about the central bank and gold. Do you guys remember who recommended to buy gold a few months back? Alan Greenspan.
Yeah, you're right. There you go. He saw the uncertainty on the horizon and he went for the safe harbor.
Oh, that's right. He did, didn't he?
One of his more well-timed quotes up there with the irrational exuberance.
Well, that was a bad one. This other one was a good one.
Yeah, he was a few years off on that one, wasn't he? All right, turning to what's popping off today. In addition to gold and VIX cash, which actually did break the 30 handle today, got up to nearly 31 intraday out there in VIX cash land. So crazy town lurking out there. We're well into the red zone if you buy the Goldman level, which is above 25 is the red zone for them. So we're deep into the red zone now, listeners. So hold on to your hats. Popping off after the bell, we got a few names of interest. One of Rock Lobster's old favorites in the gaming space, good old Activision Blizzard. One of my favorites for a long time. It's one of the more dependable premium rights in the business for a long time. Not so much these days. It actually moves a bit now. But for a long time, it was kind of like a mini Microsoft. You can come in and do some nice rights, bullish risk reversals, etc., and really do all right on this thing in the near term. This one, Activision Blizzard, of course, ATVI going out right around the 30 handle today with about a little over $3 straddle, pricing about a little over 10% move out there. So far in the after hours, they're not feeling the love, but nowhere near to what they were pricing in here. They're off. Actually, they were off about 38 cents, off about 1%. Now they're rallying about 50 cents, or up about 1%. Either way, it seems like a bit of a muted move for good old Activision. Groupon, I hate to even call this one really optionable name because it's a $2.50 stock. So the stock in and of itself is an option. So that one rallying a bit, 15% in the after hours, up a whopping 34 cents. Listeners, and good old Pandora Media, also an optionable name in and of itself when it's $8.71, a bit pricey compared to Groupon, but still sub that $10 handle where you might want to consider just buying the stock, up about 31 cents or about 3.5%. But that wasn't the big story of the week, and one of the crazier stories of the week. Still are in the teeth of earnings season. We saw a lot of love, or lack of love, I should say. I know a lot of you guys like to watch this one as well. This is good old Tesla. They reported earnings earlier this week, and we saw a lot of write-ups and analysis going into that puts were leading the charge. Puts were the order of the day. Tesla had already taken a huge beating so far this year. In fact, combined between Tesla and Solar City, one of his other big holdings, Elon Musk was off about $3.4 billion so far this year. So if you feel bad about your losses, listeners, put that in perspective a little bit. He's taken a bit of a drubbing. Despite that, puts were indeed the order of the day. About 4 out of every 5 options going up, going into earnings were in the put wing. Read into that what you will. Could have been some people selling some juicy puts out there as well. But in general, when the paper is that sizable in one direction, usually indicates some sort of directional bias to it. But that said, what we saw, even though they came out in the after hours and pretty much screwed the pooch, they pretty much said, we're not really not doing that well, not really making a lot of money, just really missed estimates badly. Doesn't matter. Once again, the hype machine takes over in the after hours, and the stock actually rallies up today, up about almost 5% on the day when the rest of the market is mostly down. Tesla being one of the few green spots out there. A lot of that coming on the hype for they're going to take pre-orders for that new quote-unquote affordable Tesla, about the $35,000 car. Even though most analysts they say it won't be available till 2017. Most analysts saying not till 2018. So how many pre-orders are they going to get for a car that really is probably about 2+ years away? But that said, that apparently was enough to turn the sell-off into a rally. And again, Tesla rallying a bit today. Mr. Rock Lobster, any love for good old TSLA in the old chat room today?
To be honest, we looked at it. We had some bad thoughts about it yesterday. We were looking at some cheap put flies. Nothing hugely drastic. However, we kind of ignored it. Just we can't nobody here understands why people are buying it. I guess it's all the future, but it's got a huge valuation, doesn't make any money. So right away, that kind of stock just bums me out. But people like it, so I guess it goes up. So Elon Musk is the master of the news release massage. Let's just call it that way.
Never has been a clearer use case for hype and PR and social media to talk up a stock. I don't think I've ever seen one than this. You have to take your hat off to that. When you could talk up your stock like that, that's fairly impressive. Or it's pretty sad for the investors to buy into it, one or the other. I don't know, depending on your viewpoint on Tesla. Of course, it closed up about 7 handles, about 5%. It actually got up as high as about 20 handles intraday. It got up to about 163 or so in that range. So this thing was really feeling the love until the teeth of the sell-off kind of dragged it back down to earth a bit, but. Apparently people liking the fact that they can pre-order that car. So we'll see if that materializes into some actual revenue. Meanwhile, time for us to dematerialize and rematerialize right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, that funky tune means it's time for the Odd Block, the portion of the show where we break down some of the weird, the wild, the downright whimsical paper maybe we're seeing out here in the realm of options. Recent shows, we were profiling some money-making paper. We'll see if we have the same fortune today. Going to kick things off, Mr. Rock Lobster, with a name I'm not familiar with, Gould. Am I pronouncing that correctly?
No, I think you might have to ask Tucson on this one. I can't say it either. It's like
gold. How you say that, Tusa?
There's gold in them there hills.
There we go.
There we go. It is indeed, of course, subtlety aside, listeners, it is indeed GLD. Closing today right around the 119 level. Up, as we said earlier in the show, about a nice 4%. Nice little gap up cooking here in the shiny stuff. If you want your flight to quality, if you're feeling the love like Mr. Greenspan is for all things shiny, then gold is where you want to be. This name obviously does a lot of paper most days, about 133,000 contracts a day. It's been averaging of late. Today, just knocking it out of the park to the tune of 863,000 contracts going up. That's VIX paper, listener. That's serious paper. About 3.7 to 1 calls over puts. No surprise there. That should probably be indicative of kind of what you expect on a day like today. And in that sea, that flurry, that maelstrom of paper that was GLD, listeners, we picked out one little tasty nugget. There are many nuggets to chew on out here. We picked this one. You maybe have some others you want to talk about. Send them in. We'll talk about those as well. But in the meantime, we're going to focus on what caught our eye today. It was out in the March expiration cycle, not in the weeklies, listeners, but in actual regular old March. It was the March 133, 140 vertical going up about 20,000 times total, obviously, of 40,000 contracts going up for 27 cents. Looks like paper selling about 36,000 contracts open on that 133 strike. So it looks like our friend perhaps taking a good chunk of those and moving them on up to a little bit higher strike, shall we say. Our friend obviously playing with a little bit of house money here. These things weren't really trading for a heck of a lot until recently, and now all of a sudden going out today at about 90 cents, up a nice 74 cents. That's a pretty good return on these suckers that were pretty much worthless not too long ago. So he's already decided, Mr. Rock Lobster, to take the money and run, essentially, and then move on up to an ever more aggressive strike, the 140s. What's your take here on this bit of a vertical roll here, closing out one, getting into a little bit more optimistic strike in GLD?
How about the 140 strike?
That's crazy town, huh?
You would 2 weeks ago it was, but not anymore. It's just 2 weeks of trade and we get there, right? Because aren't we up $20 in 2 weeks? Something like that. I guess, again, we would have to ask Mr. Tucson about that, since he has been walking around with his gold uncovered. And yeah, we were trading 104 on January 15th, 104.34. So 15 handle rally in gold, pretty huge. And all I could say is there was so much of this rolling paper, so much like callback spreading, so much just getting long, just buying stuff. Just take your pick. But this just stood out to me because they probably bought the 30, what was it, the 30s or 32s or something? Nothing. They made 80 cents on them. And then they're like, okay, we'll buy the 40s. We'll sit on it and we'll see what happens.
Yeah, that was great. That was like, we're getting out. We're out one day and we're out, taking our 80 cents and going. I love it. How often do we see that where they just take the money and run that quickly? They don't. They sit on it
except
forever.
For the GDX guy last week.
Yeah, that guy, I want to see the opening. Has he closed out yet, that guy?
I don't think so.
Yeah, he was still sitting on it. So that's why I'm saying this is kind of the polar opposite of that in many extremes. We turn our attention now, a rare opportunity to welcome in Uncle Mike into the odd block because we're playing in his neck of the woods these days. And as Andrew alluded to, he is puts off out there in GLD, which is an unusually aggressive position, unusually bullish even for our diehard bull, but he loves himself some shiny stuff. Uncle Mike, what's your take here on our friends taking their money off the table on the 133 strike, which was already, shall we say, fairly optimistic, and then reestablishing on the 140 strike? I can't help laughing at this one.
He's bullish. I mean, just like to add to what Andrew's saying, if you have that much bullishness, he's earned the right to be heard in that if he goes to, let's say he's a money manager, and he goes to the people with whom the money he's managing, and they just said to him a week ago, oh, you're crazy to buy those 133 calls. And then he can come back to him and say, well, you said I was crazy on the 133s. Are you going to doubt me again on the 140s? He has their ear at this point in time. When things move like this, you tend to have your clients, the person whose money you're managing, you have their ear when you're in on something like this. So I think right now is going to be a phenomenal time to do a collar on gold. But just at this stage, I was actually had every intention of getting out at gold at the beginning of the year. And I put in my stop loss at like 99.87. I'm like, well, what the heck? Who knows? Maybe it'll come up a little bit, and we'll see. But I'll have the stop loss in just in case. But it's obviously gone the polar opposite way, and I'm glad I did it that way, obviously. But for now, I think that what I'm going to start looking to do with this, because of the fact that there is so much skew, meaning the calls are so much more expensive than the puts right now in gold, like it hasn't been in years. It's difficult for me to resist the collar these days.
So what's the two-saw preferred collar right here? You talking maybe 110, 120, or is that too tight? What are you thinking?
Well, let's look at a couple of them. Right now, GLD is at 119, and if you just go down to, and I'm looking at March right now, the same month that we're talking about for this trade. If you look at the 115 put, it's $2 by 206. So let's just say $2.03. So that's $4 of risk. On the call side, you could sell a 125 call for 205. And so just by doing that collar, folks, you're risking $4 for the potential to make $6 and getting a slight credit on. Well, I guess technically not exactly, because there is a 5-cent difference from it's 119.05. But concept is that you're just by this basic one that I'm looking at off the screen right now, you can get 50% more upside than you can downside when doing a collar on gold. So if you're a bull on gold and you're concerned that, hey, I don't want to be buying the top, I think it's going to come down a little bit, that collar is really a good way to go at this point because of that fact that just from looking at this one specific instance, you can get 50% more upside than you can downside, have the ability to make $6 over a 30-day period. So it's almost probably around a 5% rate of return in a 30-day period. So it's a good time to be doing some collars in the gold land right now, I think.
Gotta love that commodity skew for everyone who comes playing in GLD, thinking it's just like an equity, thinking it has that typical investment skew. Calls are cheap, puts are expensive. Commodities tend not to play that way, listeners. So it does make it very favorable for some nice collar setups where usually you're kind of playing against, skew's playing against you there. You're buying the expensive vol, you're selling the cheap vol. Now it's vice versa. Take advantage. We know for a fact you can sell the 133s in March for at least 70 odd cents today. So take advantage of what our friend did and get while the getting's good as we move on in. So quick check in. Actually, Andrew mentioned him earlier. Our friend out there in GDX, still open, still about 56,000 contracts open on those. They were the 22 strike out in June, listeners, and the name rallying another 7% today. So those calls looking even better. We were talking about how he had doubled his money. Well, now they're trading about 115 today. So that's about 4x his money. So we were talking some serious money before. Our friend clearly on the right side of that train, not closing it out because he's doing well. So we'll keep an eye on that one as our friend out there continues to print money, or perhaps he'll decide enough is enough and at least take some of them off the table. I think 4X may be the point where you want to start perhaps trimming some of that. I haven't had a chance to dig into those that volume from today. 12,000 going up today. Maybe our friend taking some of that off the table. Let's keep our eye on the gold train, though. This time to the cheapy land. If GLD 119 a little bit too rich for your blood, we got you covered here with Yamana Gold Inc, ticker symbol OI. AUI. Closing today, $2.64. Also up strong, up 8% or about 20 cents on this crappy $2 name. This is the name that does about 5,700 contracts a day, doing 37,000 today. And I joked about Groupon before, but this is similar boats. The stock is an option in and of itself, but that didn't stop a friend of ours from coming in March, in particular, the March 3 strike, and loading up. When we started profiling these, there was about 1,400 going up paper buy-in for about 21 cents. As the day went on, just a flood of these things, nearly 20,000 going up paper buy-in with prices around that 21, 22 cent range. They went out bid even stronger, 20, so you had to chase them a little bit here, but he got them all, and no opening. About 3,000 contracts open, but it's clearly opening paper here. No stock or anything else with this. So it looks like pretty much what it appears to be on the surface. Someone paying about 8% or so of the value of the stock for a fairly aggressive upside play for the next few months. Mr. Rock Lobster, what you take here on buying, spending 21 cents on these calls versus a $2.64 stock?
Well, what would the Viceroy say to that?
He would already have hung up on the call in disgust.
Would he take umbrage to that?
We'll have a chance to ask him next week. He'll be on our live 500 spectacular.
Oh, cool. What's funny is gold has made kind of a good rally, and all these gold miners have, believe me, they've all made a rally as well, but not really comparable to gold, I guess. I mean, they're starting to get off the basement. We were actually looking at some trades in here of like a way to basically short gold and just buy calls in these things and see what happens. So, is it what can we say? All they're just doing is they're buying some junk calls. And interesting thing, what's the book value on Yamana Gold is supposed to be $7 a share. And it's trading $2.64. So maybe they're a fundamental analyst and they're saying, hey, this is a value stock, so we're going to go for it.
That's worth 8% of the value of the stock for several months worth of exposure. All right, we'll leave that. Where listeners, let us know what you think about buying call options on cheapy. These are pretty cheap. This is getting to the point of not optionable stocks, but still, let us know what you think about trading options on these extremely cheap names. And maybe you have some thoughts. Maybe you like to do it. Maybe you want to do that play. Who knows? We like to hear from you guys. We won't mock you too badly. Don't worry. We are open to all viewpoints here on the program as we move on to our final name. If you were tired of gold and indeed cheapy gold names, well, tough. We got one more for you. This is IAMGOLD Corp. Gotta love that name. But that's not very, it's very descriptive, shall we say. On the nose, some might say. What does this name do? Well, they are gold. Ticker symbol IAG, closing today, $2.27. So right in that same ballpark, up another 10% or about 21 cents, like our friends out there in our previous name. This is another one that does not really that much paper, about 900 contracts a day, doing about 7,500, so a decent pop for this one. 86-1 calls over puts. That'll tell you where our focus was today. Listeners, a little bit closer to home than last time. This was out in the Feb cycle. In particular, still upside call love, though. It was the Feb 2/2. Yes, listeners, not even the 3-handle. They're going 2/2. And they're paying a whopping nickel for these bad boys. Started off about 500. As the day went on, about 2,400 total. Paper just loving themselves some Feb 2/2 for a whopping nickel. Again, no stock, no nothing with these. These are pretty much what they look like on the surface. No open interest either, only 61 contracts open. This is pretty much someone else just lining up to swing for the fences. This time a little bit closer to home and perhaps a little bit more reasonable strike here. So I guess here's the question, Rock Lobster. Which of these two optimistic call buys do you like better? March for the threes or so for about roughly 8% or so of the stock value of the stock, or these kind of piddly lottery tickets here in the Feb cycle? A little bit closer strike.
It's kind of a tough choice.
So we're all about here. Tough choices,
I would have to
baby.
go with the March. At least it's somewhat, although a nickel, whatever.
I got to go with a nickel. At least if you're throwing money away, you might as well throw away the least amount of money possible, right?
And it could be there tomorrow.
Exactly. It's all gamma, baby. He's buying gamma. He's actually a savvy fellow.
But at least they didn't pay a nickel for the 2.5s that expire tomorrow. They're for the regular Feb, so they got another week. But more buying all along those strikes. So I think the retail has caught on to gold. We tried to give you the look last week when the savvy money was buying that upside. Or, of course, Mr. Tusaw banging the drum at 100. When he goes uncovered, you get long. And that's what we got right now. I think there is, and I don't know what's driving gold up. I think, again, it's all that speculation on how dopey they can be with interest rates, and that gold can go a long way on that.
I was just checking our Twitter to get an update on our listener poll, and I saw we tweeted out about our UA today, and we had a photo of what's the Austin Powers Gold Member movie.
Oh, that's right. Oh yeah, Gold Member.
So our team on Twitter, a little savvy with the photos out there. I like that one. That's funny. Uncle Mike, has there ever been a more Tusaw friendly, Uncle Mike friendly odd block than today, sir?
I don't think there possibly could be. Except for the time when we talk about doing the stupids, but I don't know if I want to open Pandora's box on that one,
That was more listener mail. I think we do have some more listener mail on that. So we got a lot of listener mail today, actually. So without further ado, let's get right to it. Time for you guys to hijack the show with your madness. Yes, it's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the man said, this is the portion where you guys get to dive in, send us your questions, your comments, your insights, your pearls of wisdom, your scathing criticisms. We welcome them all. We read them all. We don't answer all of them on the air, but we try to pick out some nuggets that are kind of fun, timely, and interesting. Before we get into all that, I did mention our Twitter poll, and started doing these, our options question of the week, last couple of weeks. They've been kind of fun. Get surprising results, actually. Some things I thought were slam dunks were not as good. Last week we asked you about after hours. Pretty strong in favor of after hours trading for options, well into the majority for that. This week though, we asked, do you want daily options? I thought this would be another slam dunk. We still got a few days left for the poll, about 3 days or so, but so far it's lining up pretty firmly against. The choices we gave were, of course, I prefer weeklies, heck no, or other, and they have to explain in the comments, and heck no, leading the dance with about 40%. People don't want their weeklies, followed by number 2, or don't want their dailies, I should say, followed number 2 by, of course. So pretty close there, but then 23%, which is effectively a no as well, saying I prefer the weeklies. So the weeklies kind of do that job for them. And I wanted to put those, yes and no doesn't give you enough nuance. I want to see a little bit more nuance to the response. That's why I try to give you guys multiple options. And then, of course, you can kind of fill in the blank yourself. So if you guys haven't played along with our poll, then surf on over to, we're at Options on Twitter. It's pinned right to the top of our profile page there, so you can't miss it. And you can just let us know what you think. Does that surprise either you, Uncle Mike, or Mr. Rock Lobster? That's so far, at least, pretty resoundingly against the dailies.
No, I can't say I'm surprised by that. I mean, the weeklies seem to be the sweet spot with what people want. I mean, the only thing that I could think of, like maybe I may want like an 8 or a 9 day option at times that I don't have, but the reality is I think we got plenty already.
Yeah, I think weekly is kind of that sweet spot where there's clearly enough premium in them to merit selling, because that's pretty much what everyone does with them, versus a daily, you're really talking about a premium buying vehicle at that point. Not a lot of really juice there to sell. So it probably doesn't attract the premium sellers, which is probably why they're saying no. And people just, for whatever reason, even though these products the short duration products were conceived to be risk mitigating vehicles for earnings and things, they pretty much all turn into premium harvesting. So it sounds like the premium harvesters just don't want the daily. Surprising stuff. A few more days left for that poll. If you haven't weighed in, listeners, do that one. All right. First off, we've got a comment coming in from KD Diddy. He's written in before. He's actually responding to our response from him from a recent episode. He's the guy who wrote in about the stupid. So that's why I get to your stupid thing before, Uncle Mike. And he also wrote in with using that kind of term that kind of threw us all called position delta. And he's Canadian, we discover now, so that probably explains why he has that. So some weird term usage. He writes, stupid position delta. That's what he calls his email. He says, position delta is a stupid term you must learn to get an options license. And he spells it in that oh-so-British way, or Canadian way, in Canada. Sure, we rule the hockey world, but we are the Jamaican bobsled team of the options industry. On behalf of all Canadians, I apologize for the term and for the Montreal Exchange. Oh, I love our listeners. Perhaps you hosers could suggest some reading on the subject of Delta. After Andrew pulled my jersey over my head and Lobster clawed me with, quote, beta weighted to spy and extra curvature, I thought I better grab some books and start giving her in the library. Good follow-up question there, KD Diddy. We don't hold it all. We like Canadians here, even if you are kind of a silly bunch with your terminology. Position Delta, I love that. You know, there's a lot of books out there. Most of the basic books do cover the Greeks in some capacity. Only off the top of my head, the only books I can think of that really focus exclusively on the Greeks are Passarelli's book, which is Trading Options Greeks. We talked about that a lot on our Options Bootcamp program, so check out that program if you want to hear more about specific insights into the Greeks and some of that fun stuff like that. And obviously Macmillan and others, Natenberg, all touch on the Greeks, but I don't think any others, aside from that one, really, that I'm aware of. Maybe you, Uncle Mike, or you, Rock Lobster, know of some other books that specifically get into Delta and the Greeks. I don't know, Uncle Mike, does Go Long, do you have a chapter on the Greeks in there?
We touch on it throughout the book, so it would definitely help you. And for $3, I probably have the best bang that you're going to get for your buck for $3. But aside from my book, the other area that I would go to check out, K Diddy, is cboe.com. They have a lot of great stuff there, and just on the Options Insider website as well, there's a lot of great educational material on there also.
Well, shameless plug for us. We do have a lot of stuff up there. We're trying to make it even easier for you guys to find that stuff. We have so much, 9 years worth of content, but it's all there. Just type Delta in the search bar and your voyage has begun. Mr. Rock Lobster, any other suggestions, specific reading with regard to Delta and the Greeks?
Besides all of our awesome courses on the subject,
you have a Delta course,
boot camp, all that kind of stuff.
Yeah, boot camp.
You know, Natenberg always is the kind of the solid one to go to on that subject. And Macmillan, both of them, you're going to learn a lot. Either one, you can probably get them on Amazon for not too much, not too expensive. Try Tusaw's book. Reason why too, he uses it. You know, and Mark's writing a book, and his second book is coming. They will cover that stuff, so that'll be a while. And we're having a beginning boot camp on the subject as well. So it's definitely out there, like trading positions. I'm trying to think of another place. That's kind of stuff we cover all the time about how, you know, your Delta moves and things like that. So, but yeah, go to those sources, go to Natenberg, grab Tusaw's book, and and fill up that Canadian library. Besides,
might have them translated.
Just Labatt's.
Might have them translated into Canadian. Have a few A's and hosers inserted in there, so they know what the heck we're talking. I used to trade with a bunch of Canadians, so I know what I'm talking about. They're
we have
an
a lot
interesting
of
bunch. All right, yeah, pretty much every good option tome is going to have a good section on the Greeks, and you can get into more of some of the stuff too. So I'll mention our site, the SIBO, if you want to get into specific on the Greeks. Again, Dan's book is a good one, Trading Options Greeks. You can check out the show we do with him, Options Bootcamp, where we go into all that fun Greek stuff and a lot of other stuff. It's all free. And if you want to start paying for some good learning on them, their deltas and others, take their version of the bootcamp, copyright pending from us over there at Option Pit, and you can check out more detail there. A lot of places you can find out about the Greeks there. Good question, good comment, I should say, KD Diddy. This one coming in hot off the presses from from just Michael. He writes, hey, at options, the $15 put in Twitter drops off the map, yet the premium still has been declining. Can you explain? And he was kind enough to include a quote here. I think this is from his phone because it's got a Verizon logo on it, but it shows a quote of Twitter, and he's indeed right. This comes in from, I believe, this morning or yesterday, and he was showing us here how at the time when he showed us this print, the Twitter was printing about 1437. It was off about 61 cents or about 4% to the downside, and yet, as if by magic, that 15 handle put out there in February was also off substantially, off about 50 cents or about 30%. How can that be possible? You buy a put, you go through your strike, it's supposed to work like magic. Mr. Michael, I feel your pain. This is, to this day, in spite of all the other things we've received, to this day, the 9-year history of our site and our network, this is the number one question we receive. Granted, it's usually the other way around. It's usually I bought a call, and the underlying rallied, and I still lost money on the call or didn't make as much. How is that possible? But your analysis, your scenario is the same, and the analysis is pretty much the same. If you look at what happened in Twitter in the last couple of days, anyone who's been paying attention to the market pretty much knows this. Of course, it was Twitter earnings time. Not exactly the best time for good old Twitter getting shellacked, to put it mildly. But as we've said many times on this program and others, going into that event, the earnings, particularly for a frothy, volatile name like Twitter, what happens is, the analogy I often use is the balloon. That balloon keeps filling up and getting bigger, and that's that volatility premium. And once the event happens, that you put a pin in that balloon because this just bursts. It bursts open. All that premium goes racing out. And unless there's a dramatic surprise in one direction or the other, you're going to probably lose money on those long premium positions. Unless, again, that's why we say all the time, it's a very difficult road to hoe trading options through earnings because there's so much froth, so much back and forth, so much crazy. That's why, we recommended this. I know it's one of Andrew's favorite trades is you put it on before a couple of weeks before earnings and then take it off, get that free week or two of gamma out of it, and then don't even deal with those white-capped waters going over the falls into the earnings event, because you're seeing it right here. The balloon popped in Twitter. And even though the stock sold off, it moved in your direction. It wasn't enough to overcome the dramatic implosion in volatility premiums that took off. Yeah, you made about 4% in downside in the stock and lost 30% on the option. So there you go. That's kind of that volatility balloon coming in a very stark and demonstrable and unfortunate for you. You don't say what you had on. Maybe you were short them. I don't know. Maybe in which case you're a happy camper. I don't know. But it doesn't sound like from the tone of your question that you were indeed happy about that scenario. But again, this happens a lot. Worth exploring yet again around earnings time, because it is a time of year where everyone gets caught on this one. Let's start in the realm of Mr. Rock Lobster. Anything to add here for our poor friend, Mr. Michael, who got bit by the earnings vol bug?
Well, again, we've seen that before, and that's why you have to kind of trick the fact that the volatility is going to go down. And this goes back to the position delta question from our esteemed Canadian, because the delta of the option is going to change if you change the volatility, which is why we have our boot camp. So we teach people how the options work. Of course, everybody learns this the hard way once, and then they forever know it. So yeah, if the vol goes down on an out of the money option, basically the volatility move is more than the underlying move, and you don't make the money you thought you were going to make. So the other option is a little bit more in the money, but the move was so tepid in Twitter, I don't think there was a put you could have bought that would have worked. I think the only thing that you could have done is sold calls or call spreads, and which obviously is a different type of trade. So that's what you got. And as of right now, with the market going a little sideways to down, you might make that money if Twitter, trades 13 or something like that. But if it doesn't, it's just going to decay away like an iceberg and eventually go to nothing.
Those decaying icebergs. We got time for one more here on the mail block. I'm trying to give a taste from each platform. Sometimes we favor one or the other. I want to make sure. So far we got an email question, we got a Twitter question. We'll wrap things up with the ever elusive Facebook question. For whatever reason, people don't ask a lot of questions on Facebook. We got an interesting one in this week from Alex. I think you're coming to us from Sofia, Bulgaria, by way of Houston, Texas, I believe. So interesting. You don't get many of those. But he had an interesting question. He and I kind of have an interesting back and forth on Facebook. He was asking about his question is, what are your thoughts on shorting 1 year 25 delta puts on LinkedIn? He asked, this is earlier this week, he asked it about midday today. LinkedIn was at 105 at the time he wrote that. Let's see where good old LinkedIn closed today. But that led to an interesting exchange for me and him, because I was curious about why he chose that time frame, why he was thinking about writing such a lengthy put, and I kind of walked him through some of the vagaries and nuances of theta and why he may want to consider writing it a little bit closer to home. And most studies and most analysis you see, shows that over time the nearer term writes are going to outperform. In fact, that big study came out of the SIBO just last week, showing the weekly put write versus the monthly put write, and their put index dramatically outperforming the weekly, dramatically outperforming the monthly, just from an aggregate return perspective, and everything else, drawdown, annual total premium, all that kind of fun stuff. So interesting back and forth. I won't get into all of it here because it was a pretty lengthy discussion we had about this. But I thought it was an interesting starting off point here for a conversation about kind of timing. 'Cause I'm trying to think off the top of my head. There aren't many scenarios where I would think of, unless there's some weird variant. That's why I kind of pointed out to Alex. Unless there's some extreme volatility distortion in the far off portion of that curve, where for some reason that 1 year out month is extremely bid from a volatility perspective, barring that one aberrant scenario. I can't think of many where I would favor the 1 year put. I mean, there's so many reasons. Again, it's not just the aggregate premium being better in the monthlies and indeed the weeklies, but also you're writing more closer to home. It gives you many more opportunities to adjust throughout the year. If you're at that 1 year put, you're kind of stuck with that one strike. And who knows what's going to happen a year from now in LinkedIn. That strike may not be relevant anymore, maybe super deep relevant and maybe causing you problems. You have to roll. That's not an ideal scenario. So the shorter term stuff allows you a little bit more time to adjust. I thought I'd put this out as an interesting thought question. Maybe we'll start with you, Uncle Mike. Do you have any scenarios where you utilize really far off puts as a short put getting into a stock position, or do you tend to favor the other approach of a little bit closer to home?
Most of the time, yes. I tend to favor a more shorter term approach. Usually I would say 1 to 2 months out would be as long as I would go. But there is a scenario, funny you should mention that, Mark. There is a scenario that I have with a smaller section of my assets under management recently, to where I needed something to do from a conservative level that I wasn't something to where I was looking to make a ton of money on, but it wasn't something to where I wanted to have a lot of really extreme exposure to bonds. I'm very cautious on bonds right now for a variety of reasons, but I just needed something to do with some of the bond section of the portfolio for clients. And so what I ended up doing is I looked at TLT. I looked at TLT for hours, I'm convinced. And so I thought about different ways with which I could sell premium on it, just own it, whatever the case may be. And what I ended up doing was selling a September 120 put on TLT. Now, what does that do? First off, it's not a 1 year put by any means. It was a 9 month put. And what I saw in that was the ability to get a little bit of a drawdown in TLT and still get an annualized 4% rate of return. So with that, it's one with which it was a smaller section of cash. It was a liquid enough option to where I could roll down if the bonds did come roaring down. But it was a way with which I could get a little bit of an income-based return. It was just one of those scenarios to where it worked for what I was trying to do. And I think I've done this maybe 3 or 4 times in 15 years of trading.
There you go. That's why I toss it to you, Uncle Mike, because I know you always have some timely example lurking in your arsenal there to apply to that. You also have some good questions about the commissions and things and how that adds up versus the premium. We don't really have time to get into all that now. Maybe on a future show we can discuss that in a little bit more detail. It's a good thought question to work through for a lot of our listeners. But unfortunately, we'll have to leave it there as we keep on rolling into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show. We tell you what we're watching for the rest of the week into the old weekend. And let's start things off with just a quick recap of what we were talking about at the top of the show here. Good old Activision Blizzard. I said the worm had turned a little bit. The worm has turned again to the downside, off nearly 5 handles now out there. So outpacing, they're off about 15%, so dramatically outpacing their straddle, which had priced in about a $10 move. So apparently the market now deciding they don't like what they're seeing out there. We'll keep an eye on that one. Again, an interesting one for the premium rares out there these days. Not as dependable as it once was. As also a lot of stuff lurking out there. The Chinese unease, trademark pending on that term, as well as the Fed unease. A lot of that lurking. Mr. Rock Lobster, we'll start with you. What's cooking in the land? I'm sorry, before we even get to that, what are you watching for the rest of this week into the old weekend?
I guess mainland China reopened. They're on holiday for a few days, so we'll see what happens on Tuesday. Of course, Monday we'll see, but we have a holiday on Monday. So, and just the more of this, how long this, where the market stays kind of disconnected from, economic conditions. This country still don't. We're not recessionary, I think, but the market's acting like we're going to, and again, they're just trying to. I guess you know what they're doing. They're repricing the Fed put, and I think the Fed put used to be around 2,000, and I think now they're sticking it around 1,700. So, I think that's what's happening. So, I don't expect the vol to go down a bunch. I would be surprised if the vol hits 25 by next Friday on the low side. Would be a surprise.
And Mr. Tusaw, same question for you, sir.
It's about earnings right now. And the only way that this market's going to come up in the near term is if we have some blockbuster earnings. I don't think the Fed can say anything right.
Well said, sir. I'm going to have to leave it there, unfortunately. As the music means it's time for the end of this fine program. But before we go, as always, let me check back in with my cohorts one last time. Mr. Rock Lobster, in addition to the ice rink and all your poor fills, what else is cooking in the land of the pit?
Boot camp, end of February. Answer your questions. Again, for the cost of an 8th out of 10 lot, you can actually learn something. So, always money back guarantee on all our classes, and people hardly ever want it, but again, we offer it. So, there you go. You can't lose.
Can't lose, listeners. There you go. 100% guarantee of pure profitability with no risk from Mr. Rock Lobster. I'm teasing, of course. Everyone over to optionpit.com to learn more. And Uncle Mike, how go things in the land of going long?
Oh, it's going great. For the cost of an 8 lot, if you trade through the TD Ameritrade umbrella under RCM, the commission anyway, you can buy Go Long, new option strategies for buy and hold investors, which outlines everything with which I talk about on this show. And we also have 2 new chapters from the first edition, one on portfolio margin and one on weekly options. Should you be interested in discussing finances or your portfolio in general, also feel free to contact me at any time, 312-212-3531, or send me an email at mtusaw@rcmfs.com.
And maybe given the current market environment, maybe you could amend that title to be Go Long and occasionally into cash and or short, just to attract a few more buyers.
That's not a bad idea. I should have the Go Short version and the Go Long version based on markets.
There you go. They just flop them in and out. So you see those sales spike. There you go, baby. Play to the market. Play to your strengths. All right. Thank you for that, Uncle Mike. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, all the fun things you guys do. Great questions as we keep them coming across all the platforms. Twitter, email, Facebook. We love them all from all the different ways you guys reach out to us. The website too. No shortage of all that fun stuff. And we're going to get to more of them next week. Remember, speaking of next week, no show on Monday. We are off for the President's Day holiday, but we'll be back. Fingers crossed, live. Beaming out to you live 1 week from today, next Thursday, February 18th. So mark your calendars. Set aside some time for the glorious, glorious madness that is the live Option Block 500th episode spectacular. And we'll see you then for more epic Option Block goodness.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.